In November 2025, the world once again found itself at the mercy of a sudden and bewildering shift in U.S. economic policy. President Donald Trump, known for his unpredictability and dramatic decisions, stunned the global markets by announcing a sweeping increase in tariffs on virtually all countries. This announcement came despite his earlier efforts to reduce tariffs and promote freer trade. The reason given this time was wrapped in vague national security concerns and the need to protect American interests in an unstable global environment. Financial news outlets scrambled to analyze the implications, but the reaction was swift and unforgiving. Stock markets around the world immediately responded with sharp declines, led by the Dow Jones and the Nasdaq, which fell by significant percentages within hours. Traders and investors were addled by the unexpected reversal and the fear that this might mark the beginning of a new era of economic protectionism and global instability. Inside the White House, however, the mood was far from panic. Trump's closest advisors and business allies moved quickly. Several of the president's associated financial groups and investment firms began quietly purchasing massive amounts of stock, capitalizing on the market's initial shock and subsequent dips. Insider whispers spoke of coordinated moves and carefully timed by ends that could only be orchestrated by those with privileged information. The president himself maintained a public posture of confidence, making bold statements and press briefings about how these tariff increases would eventually restore American manufacturing and jobs, making America great again. Yet behind closed doors, there was a complex game unfolding, one where tariffs were not just a tool of economic policy, but a means to manipulate market sentiment for personal and political gain. Meanwhile, ordinary Americans felt the brunt of the turmoil. Prices on everyday goods began creeping upward as import costs rose, and many companies warned of possible layoffs or slowed growth due to increased production expenses. Public discontent grew louder, with protests erupting in cities across the country. Demonstrators marched with signs demanding economic justice, fairness, and an end to policies that seemed to benefit only the elite. Despite the swelling unrest, the administration remained unmoved. Trump's inner circle had no intention of reversing course prematurely. They had calculated that the short-term pain for many would be outweighed by the financial windfall for their investment portfolios. As weeks turned into months, the stock market remained volatile, but the presidential-affiliated groups steadily accumulated wealth. This strategy bore fruit when, after several months of mounting pressure and slipping public approval, Trump announced a gradual rollback of the tariffs. The message was clear: a slow and measured return to lower tariffs, framed as a victory for American diplomacy and economic leadership. Investors reacted positively, and markets surged upward as confidence returned. The timing of the announcement was scrutinized by financial analysts and political commentators alike, many suspecting it was designed to maximize gains for those with insider access. Meanwhile, the protests continued but seemed increasingly ineffective. Law enforcement stepped up crackdowns on demonstrations, and the administration launched propaganda campaigns emphasizing the benefits of the policy shifts. Public sentiment grew cynical as it became evident that the system favored a privileged few while the majority bore the cost. In the global arena, other nations scrambled to respond to the erratic U.S. policies. Some increased their own tariffs in retaliation, others sought new trade alliances, and many remained uncertain how to navigate the shifting landscape. Economies dependent on exports to the U.S. felt the sting sharply, with growth forecasts revised downward. Within the corridors of power, the economic chess game persisted. Trump's administration was increasingly seen less as a democratic government and more as a powerful cartel controlling the levers of finance and politics. The president's private business ventures, intertwined with policy decisions, became the subject of intense scrutiny, but with limited legal consequences. This saga of tariffs and market manipulation exposed deep vulnerabilities in the global financial system and highlighted the troubling extent to which political power could be weaponized for personal gain. The American people's voices, though loud and clear, struggled to influence a system that appeared rigged from the top down. The months ahead promised further uncertainty as the world watched a president and his circle use economic policy, not only to reshape international relations but also to enrich themselves, while the rest of the country bore the fallout in silence. As December unfolded, the repercussions of the tariffs rippled through every layer of American society and the global economy. The initial shockwaves of Trump's announcement had given way to a complex web of financial maneuvers, political power plays, and mounting social unrest. The slow easing of tariffs was hailed by some as a sign of rational governance, but many saw it as the final act in a carefully orchestrated scheme. Behind the scenes, Trump's affiliated financial groups capitalized on the fluctuating market. They had purchased stocks at depressed prices during the tariff hikes and began selling off assets as the announcement of tariff reductions sent prices soaring. This buy minus low, sell minus high tactic translated into enormous profits within a matter of weeks, drawing the attention of watchdogs and media outlets, but no formal investigations followed. The president's control over the narrative was relentless. In televised speeches and social media posts, Trump portrayed himself as a champion of American workers, the architect of a booming economy poised to rebound from adversity. His messaging focused on fair trade and putting America first, while dissenting voices were often dismissed or labeled as fake news and enemies of progress. Yet the reality for many Americans was harsh. Inflation rose steadily, eroding real wages. Supply chains, strained by policy uncertainty, caused shortages and delays. Small businesses struggled to keep up with rising costs and unpredictable demand. The widening wealth gap became more apparent as corporate profits soared but average household incomes stagnated. Mass protest, though persistent, faced increasing obstacles. Cities deployed stricter policing tactics, and new regulations restricted the right to assemble and voice dissent. Activists were surveilled and, in some cases, detained under charges of inciting unrest. The once vibrant chorus of public outcry was muted by fear and fatigue. Internationally, the U.S. faced criticism and isolation. Trade partners expressed frustration at the volatility and unpredictability of American policy. Some nations moved to diversify their markets away from the U.S., forging new alliances and accelerating regional trade agreements that excluded Washington. The global economy entered a period of cautious recalibration, uncertain of the future trajectory. Within this fraught context, Trump's faction consolidated power. The administration's intertwining of business interest with political authority set a precedent that blurred the lines between governance and profiteering. Regulatory agencies, weakened by appointments loyal to the president, overlooked conflicts of interest and ignored mounting evidence of insider trading. Financial experts warned that the erosion of institutional checks and balances threatened the very foundations of market integrity and democratic governance. They cautioned that without transparency and accountability, economic policies would increasingly serve private interests over public good. As 2026 approached, the American public faced a sobering reality. The cycle of tariff hikes and rollbacks was not just a policy oscillation, but a deliberate strategy employed by a select few to amass wealth while maintaining political control. The promise of economic revival was overshadowed by systemic inequities and a shrinking space for democratic engagement. The story of 2025 became a cautionary tale, a stark reminder of how the fusion of political power and financial interests and destabilized societies and economies. It underscored the urgent need for reforms to protect the public interest and restore faith in institutions designed to serve the many, not the few. Meanwhile, in Springfield and beyond, citizens watched with a mixture of frustration and resignation as their voices seemed drowned out by the noise of market forces and political maneuvering. The lessons of that turbulent year would echo for years to come, shaping debates about governance, equity, and the true meaning of democracy in a world increasingly dominated by the convergence of money and power.